Next person I'm engaging with is Magauta Mphahlele, and I must tell the story.
No, Henny.
I will tell the story. The first time I really got to know Magauta and to know that she's in the room, we were busy with the lobbying and the processes around the National Credit Act back in 2004. And after lunch, also like everywhere else in the world, not the most exciting session. And one of those tall doors in the main room opened up, but there was nobody. The door just opened up, heard the footsteps, and the next thing, a little guy like this ran across the floor and said, "Mama." So Mama was Magauta. The chairman at the time was Ben Martin. Ben Martin,
Yes.
and Ben looked up and down and he said, "We start them early nowadays." And that is where we had our first engagement with Magauta. Magauta is well known in South Africa in many spaces. She is a non-executive director within MFSA and has been for a couple of years and has served with distinction, especially in the last year where we had to deal with some very interesting matters. She is also the Consumer Goods Council Ombud. She is an entrepreneur. She's a social media guru, and she enjoys cooking. But Magauta, on a very serious note, we also know you have an absolute passion for consumer matters,
Yes.
and you come with a very definite perspective. You sat through the previous panel, which was really, I think, some intimate and some important sharing happened there. So looking back on that panel and having the floor for yourself, what is the message you got and what is that what you would like to share with our members?
Thank you very much, Henny. And yeah, the parliamentary story is a funny one, but yeah, it tells you that as women, we should not be ashamed to let the world know that sometimes we are mothers and we need to bring our children to the boardroom table. So basically, that's what I've always done. Yeah, I did listen to the panel, and clearly the panel's focus was that this was the pandemic and the lockdowns was about adaptability and grit. And from the banking sector, we heard how the banking sector came to the party in terms of providing relief to consumers. We heard how debt collectors also managed to deal with the lockdown and not being able to collect. We heard from the credit bureau side, the data collection side, on how they dealt with that side of issues. But from a consumer perspective, I think there are a few questions that I think we need to pose. I mean, yes, the credit industry came to the party in terms of providing relief, but it was not all perfect. You know, there were consumers who did not qualify. The issue of call centers being closed meant that some of the communication channels were not communicated properly and were not working effectively. And I think in some instances, the industry did not leverage the data that is available to them. Even now, for example, if you look at some of the documentary requirements that were imposed, we know the National Credit Act does require a payslip and so on, but there are other additional information that is required. And I'm wondering, with all this data available, is the credit industry not to a point where they have this information? Are they leveraging the data to make things easier and better for the customer? And then there are issues of going forward. Are consumers going to be penalized for the relief that was provided to them? Because now we have to talk rehabilitation. Yes, people were given 3 months, 6 months, but what is the way forward? Taking into consideration that some of those people are not employed, or if they are employed, there's still a catching up to do. And even for those that were not directly financially impacted, for example, my salary did not reduce, but I had to support other people. So it meant that although on the bank statement it showed that I'm okay, I was actually not okay because I had 6 or 7 other people that I had to assist to pay rent. And the reason why I'm asking whether consumers are going to be penalized for the relief that was provided to them is that in 2013, I was retrenched and my bank had to consolidate some of my debt. So last week I applied for a bond and they said, remember, you have that consolidation loan. So clearly I was being penalized. So I said to them, I thought you were helping me and I've been self-employed since 2013. And all of a sudden you are telling me about an issue that occurred in 2013 where I was given a consolidation loan that I've been paying well. And now you are telling me you cannot give me a bond because of that loan. So are we saying that consumers who got relief now are going to be penalized? And the other issue, why I'm asking is that, are they leveraging the data that they have access to? Because now we are talking digital platforms, we are talking technology. So I'm self-employed and I applied for a bond last week, just in time for this. And the amount of documentation that was required, I needed an auditor's letter to confirm my earnings. All my earnings go into my bank account. So I was, how do you not know how much comes into my bank account? Why do you need an auditor's letter? I needed an IT something. I needed 2 years financials. If the financials, the year end was more than 6 months later, I needed a cash flow statement that I needed to submit. And I was like, you know, where is Know Your Customer? How are you leveraging technology to make things easier and better for me? And the other issue is communication. And that also happened during the lockdown when people were applying for relief. I think the industry is very good at communicating how and what, but why? Because the why helps the customer to understand why certain information is required. So we still have communication when they say, no, this is the list of documents you require, submit them. But making a customer understand why they have to provide certain information makes it easier. And then the other issue is that while other people saw the pandemic and the lockdown as an opportunity to innovate and to be customer-centric, there were sharks. And unfortunately, some of those sharks were debt counselors. We saw a lot of, and I'm a debt counselor myself, but we saw a lot of misleading advertising. You know, I saw it yesterday where they said, no, this is a special program for women. This woman had a credit card debt of 57,000 rand. She was able to reduce it to 12,000 rand, apply. So we saw a lot of that because consumers are vulnerable, they are desperate. We have sharks in the market that are taking advantage of consumers through misleading advertising and promising things that are not good for the consumer, but better for them in terms of making money out of vulnerable consumers. And then there's also the issue of, and I've heard some of the panels mentioning it, informal lenders. We need to stop demonizing informal lenders. Yes, they are illegal, I understand that, but we need to drive deep and understand why do they continue to exist? Why is there a demand for their service? And why are formal credit providers, registered credit providers, not able to fill that gap? And I've always said, as a high income earner, if I am in trouble, I've got access to my overdraft. The low income person, what is their overdraft? Sometimes the informal lender is the overdraft. Because an overdraft, I don't have to really go through hell to apply for it. It's there when I need it. The informal lender is there when the consumer needs them. So what are formal credit providers doing to ensure that when their customer is in trouble, they are able to access that assistance. I understand that there are regulatory obstacles, but we need to sometimes go beyond regulation. And how we are able to go beyond regulation is to understand your customer. And your understanding will help you to serve the customer better. So I think those are my views, Henny.
If you had to set up a brand new microfinance business today, and you have the funding which you need, as much as you need,
yes,
and you've got a patient investor, and he says, go and build a flagship. And this thing must be consumer-centric. Where will you start? What would you look at? And how do you think you're going to be different?
You know, Henny, I'm happy you are asking that question. And as part of being a board member here, I was lucky to be able to be part of the Bank Sita International Development Program in developmental finance. And part of that, we visited a few countries looking at how they are improving access to finance. And one of the biggest microfinance banks in Ghana, the CEO knew where his customers lived. So if his customers lived in the township, the CEO had worn his techies and he had gone there. And the CEO knew that Magauta, who wants to start a small puzzle shop, what is her dream? What is driving her? He understood that Magauta might not have a formal credit record, but she is an honest person. And that also goes to Stockfirst, why the formal sector is not able to leverage that money of informal lenders. Whereas in other countries, they've been able to do that because why? They went there to understand. They didn't say, fit in with what is already in here. How can we help you? You retain who you are, but we can give you the technology to be able to assist you. So that is customer centricity. Customer centricity is not about, hey, making it easier for you to apply for a loan on a cell phone. It's understanding my needs and my challenges at the most basic level. And one thing we are not being able to do here in South Africa is also issues of small micro businesses because of exactly that same problem. And that came out also when I was applying for the bond. The minute I said I'm self-employed, hi, Bo, it was like, no. Even my private bank, I was like, she didn't know me. She like, it's gone to credit, I'm standing there. But if I was buying a car, a R1 million car versus starting a business, I got my R1 million car without too many questions. So the issue was like, I have a track record. You see my income. I'm an easy one, whereas in other countries, they didn't even have the banking track record. You know, the money is not coming through the bank. You still have informal collection and retention of money. So that's where we need to start. Because in South Africa, I think we are too risk averse, especially for people who are self-employed and are creating employment. I create employment, I'm employing people, but I felt like nothing when I applied because they were like,
So, Magauta, it's interesting that members may or may not know that about a week and a half ago, Treasury has called for papers due by the first week of December on financial inclusion. So, maybe two questions and a third comment. If you were sitting in Treasury and you had to evaluate what was coming in, what would you think the state would be looking for? So wear your government official hat. And what do you think we can offer from our side, which they haven't thought about? Because I think that is the thing in South Africa. We have said everything possible about everything in financial services. Yes. I believe so.
Yeah.
But there are things that's not working.
No, it's not.
So those are the two questions I want to pose for you and hear what you've got to say. And then I'm going to throw a third question out there where I say that the ultimate underwriting in financial services for your business is repeat business by the customer. It's not the regulator or the financial underwriter. I'm going to put that out there, and we have to come back to that.
And that's why we came last, because we can do everything. The customer at the end of the day is one that is going to decide to buy the product and to decide to stay with you.
Yes.
Look, I mean, when we on paper, South Africa financial inclusion is high. A lot of people have bank cards. You know, a lot of people can use them. Cell phone penetration is high. I don't think we have leveraged that enough. Obviously, there are other network issues and data access issues that are still being dealt with. So for me, that is not the problem. The big difference between South Africa and other countries is that other countries, they have created microfinance banks, microfinance institutions, and the big difference is that in other countries, they have changed how they regulate banking and deposit taking.
Yes.
Yes. So it's a tiered kind of approach. And what has strengthened microfinance institutions in other countries is that they are able to take deposits, which then enables them to deal with issues of collateral and also encouraging people to save. So they would say, save for much, and if you save 10 rand, I'll be able to give you 5 rand. So there are regulatory issues that are an obstacle, but I think there are issues that credit providers themselves are not willing to take risks.
Okay, so let's go back to the question. So the papers land digitally, probably in piles like this, 5 to 4 on the 5th of December.
Yeah.
As a pure bureaucrat, must now go and work through it.
Yeah.
What do you think the state, his bosses at Treasury and Cabinet, what must he look at? What must he find? Which is not there today?
What is not there in South Africa? I mean, we even saw during the lockdown, there was a fund created for small business to access loans. That did not work. And we need to look at why that did not work. And I still say that the criteria that you are using, even some of our regulations are creating barriers to entry. We remember the issue around self-employed people or people who did not have bank accounts having to submit banking statements or having to, I mean, we knew the case went to court. So we need to look at because it's not only about the service providers, it's about also the regulators, that they need to change how they regulate. Because in other countries also, it was easy for people to come with innovative ideas and regulators would work with them. Whereas here, sometimes the regulator will just block something without even looking at the impact. So I think that is an aspect that needs attention. Consumer protection sometimes is misunderstood and sometimes the consequences are not good for the customer themselves. So I think they need to look at both. And for me, the big issue is being able to be innovative around collateral, around the criteria that we use. Because what I saw, some of the examples that I saw is that they were able to show us somebody who was running a multi-million business, but they would tell us that we started with them when they had nothing. So there, the role of the private banker is not to sell me a credit card. The role of the private banker was to go with me when I start my Magauta business and help me to grow that business. And that was a huge difference.
So if the banks don't do it, should the microfinance members do it?
Yes.
And how would you, because our statistics say, and I'm talking under correction, around about 30% of them are already dabbling there. It's not public.
Yeah, I know.
Which to me is a good figure.
Mm.
How do you see that play out going forward, and what is that which the MFSA should advocate for to enable this to happen?
What I saw is that the role of associations was very central
Okay.
in other countries. So I think right now the big challenge is that associations, and sometimes it's the response to how the industry is being regulated. So they are forced to play mainly an advocacy role to put out the fires that some of the laws that are coming in that are impacting on their members, you know, and we know what's happening now. We've seen a lot of legal battles between associations and regulators, and not only MFSA. But what is happening in other countries is that regulators and associations are working together. For example, in the financial inclusion space, the policymakers and legislators would say, we need financial inclusion. For us to be able to be successful, we need providers who are willing to take that risk. How do we support them for them to take that risk and create an enabling regulatory environment for that to happen? So that changed how the associations were approaching the issues, because there was a collaborative effort, not the kind of friction that we are seeing now.
So Magauta, you made a statement, and I think it's a crucial bit of information. That is, you say that consumer protection in South Africa is misunderstood.
Sometimes I think so, yes.
So why do you say that? And maybe I'm going to give you an example of, I personally believe this, I believe that it's misunderstood, and sometimes in certain circumstances. We involved in the debit check project. The assumption at that project was that providers of services abuse consumers.
Yes.
When the research started coming out, we also saw that consumers were managing their cash flow.
Cash flow, yes.
The consequences of all of the assumptions that's made and the work that's still having to be done is enormous. And one asks you, at what point, because is it a compliance exercise, and at what point does it actually add value to the ecosystem?
And that is an important question, because I mean, you've said I was at DTI, I was part of the process of drafting the National Credit Act. And I think, yes, we came up with a good piece of legislation with some, you know, boops there and there. But we also need to have a countrywide cohesive strategy. So you cannot have National Treasury, Department of Trade and Industry, and other departments not talking to each other to say, if Treasury says we want financial inclusion, all the relevant departments need to sit together and say, for us to be able to achieve financial inclusion, these are the regulatory tools that we require. This is the relationship that we need with an industry. We are not now looking at the 99 rand complaints, because sometimes that's how we regulate. We'll say there are 1,099 rand complaints, and for us to stop the 99 rand illegal debit orders, boom, we've forgotten that we need financial inclusion, right? So that is a mindset change, an approach where we also, as regulators, well, I'm not there in that space anymore, but we need proper research that is underpinned by a focused, cohesive strategy to say, this as a country, this is where we want to move. We are not only looking at the 99 rand complaint.
So if our members want to go forward and work with government, work with state around financial inclusion, I'm back to the paper basically.
Yes.
If we go and do soul searching, at the end of that, what is the message that we need to put in the paper? What are the things that we need to do differently? Or what are the new things we can do?
I think the big difference is that the industry needs also to not wait for regulators to come up with the research and do the researches. So I've always said one of the things the MFSA needs to do is to do some research to back up some of the points that they put forward. And that is what happens in other countries. So, because we cannot just keep on talking and saying, I mean, you gave an example now to say we thought providers were abusing consumers, but the research gave a different story. So come up with the different stories, and I think it's one of the things that MFSA needs to do.
Facts.
Yes.
In current climate, facts.
Yes.
Magauta, I want to conclude and bring the discussion to an end. If we go back to the consumer, is what this discussion is about. And you, the guy who is in that LSM where he's with the bank and he has facilities with our members. Let's say he's 35 years old, he's a teacher, and he's got 2 children. What is happening in that guy's life at this point in time with COVID and everything that's happening? What is his prospects? What does he worry about? And how does the microfinancier come into play in that situation?
A very good question to direct to your members. That is customer centricity. That is what credit providers should be asking themselves now, and should go and find out from consumers, and based on those answers, innovate and come up with products that would address those challenges that consumers are facing.
Then we get the answers and we find that the regulatory framework is not working. What do we do next?
You engage. And I think, and I'm saying now that we need regulators that are willing to engage. It's not a one-way street. And at the end of the day, it's not to benefit the industry, it's to benefit consumers and the country. And I think we need to see a different way of regulating and coming up with regulation.
Last comment, if you look at the future of consumer centricity, consumer protection within financial services, specifically in South Africa, how do you see it going? Well, how do you see that? There's elections coming, there's municipal elections, we're in the wake of COVID, there's a lot of things happening. How do you see that landscape play out?
Consumer protection is very important, but it should be driven by intelligent information, because unfortunately, there are issues that regulation needs to address. And I always say to industry, sometimes it is your fault, because before regulators come up with regulation, it takes quite a long time. They make noise about what they are worried about. But sometimes industry is not proactive enough to deal with those issues themselves. I've given an example of the current Ombudsman system. It's industry-driven Ombudsman systems that are funded by industry and supported. But we have some players in the industry that are not supporting the industry Ombudsman. The industry appoints the Ombudsman, the industry decides on the funding, you sit on the board, you decide on the strategy. When regulators come in, when the Ombudsman is appointed by the minister or by parliament, when the fees that you are currently paying to the Ombudsman become a formal tax, you lose that flexibility. So I'm saying sometimes industry is given the opportunity, but it mishandles. Sometimes it's not proactive. And I think that's where we need to see industry being proactive in terms of addressing some of the issues that regulators are worried about, because it's not all of them are not, they are important issues. So it's about working together and to create an enabling environment, and industry can contribute to that, but regulators as well.
And linking that to our theme of grit, how do you see that engagement and grittiness? Are these processes choreographed in your mind?
No, I mean, we all know that currently they are not perfect. You know, it's a process of engagement and trying to get to a point where there can be synergy in what we all want to achieve. We want an industry that is productive, that is working, that is creating employment, that is helping people to achieve their dreams. I think regulators want that. And now if there are regulatory obstacles that are being created, they need to deal with. But industry as well needs to come to the party.
Magauta, I think that concludes the questions and the discussion on what you have. And to me, the important element here is spoke about the role of associations, spoke about innovation. In the previous discussion, they spoke about social innovation, where bank officials had to become marshals for the safety of people. To me, it's a social disease, therefore it requires a social solution. A technology solution can't work in that circumstances. But I think most important to me, the consumers are ours. It's our responsibility and our privilege to serve them, and that could benefit everyone. And where there's resistance to our thoughts, we must ask questions about, are we doing enough to convince people that we're doing the right stuff? So on that note, members, once again, thank you, Magauta, for your time. Thank you for the discussion. If there's anything you'd like to add, now is the time to do so. You once again served in the board with honor this year.
With a privilege. Thank you so much.
Okay. Privilege to have you as well, and thank you for that, and thank you for your time and for your preparation. Much appreciated.
Thank you.